Hey guys, this is Maria and welcome to my channel. In today's video, you are going to discover how to identify the trend and the importance of knowing the Forex tendency to increase your profits and lower your losing trades. You will also learn the number one secret to increase your winning using any Forex strategy and trading platform. Plus, I am giving away a free ebook about understanding the myths of market trends and patterns. So don't go anywhere and stay up to the end. But before I begin, if you haven't, please subscribe to my YouTube channel and press the bell notification so you can be notified when I upload new videos. Now, let's begin. Although Forex indicators can be helpful, basic trend analysis using simple tactics such as analyzing swing highs and lows can provide us crucial information on the existent trend or lack thereof. Trend analysis is an essential component of successful trading. What is Forex trend? A trend or a tendency is a price behavior which involves overall price increase or decrease. A currency pair is trending when it is increasing or decreasing for a longer period of time. There are two types of trend tendencies in Forex: a bullish and bearish trend. What is a bullish trend? We have a bullish trend when the price accounts for higher bottoms and higher tops on the chart. In this manner, the trend line during a bullish trend should connect the price bottoms on the chart, so the bullish trend line acts as a support. Following this tendency, in case of a new price interaction with a bullish trend line, we typically expect the price to bounce in a bullish direction. What is a bearish trend? Bearish trends have opposite functions to bullish trends. The trend is bearish when the price action creates lower tops and lower bottoms on Forex chart. In this case, the bearish trend line should be drawn through the swing tops on the chart, and the resulting trend line acts as a resistance for the price. Following the bearish trend, in case of a new price interaction with the trend line, we expect the price to typically bounce in a bearish direction. What is trend line? One of the simplest and most effective ways to analyze trends is through the use of trend lines. A trend line is an on-chart diagonal line which connects a number of tops or bottoms on the Forex graph. If the trend line manages to connect a number of price peaks, then we expect the price action to conform to this trend line. In this manner, we can say that the basic function of the trend line is to act as a support or resistance for the price action. The image below will show you a classical Forex price tendency with its respective trend line and eventual breakout. This is the daily chart of the pound dollar. As you see, the cable price accounts for lower bottoms and lower tops. This implies the presence of a bearish trend. The red diagonal line is the bearish trend line, which contains the price action on the way down. The black arrows point out the places where the price tests the trend as a resistance. In this manner, we have a 6-time touch bearish trend, and on the 7th interaction of the price with the bearish trend, we get a bullish breakout through the downtrend. It's marked here in a red circle. The price closes a candle above the bearish trend line, implying that the trend is broken and the pound-dollar price direction is likely reversing, as you can see here. What is a trend following system? In a trending market, there are two types of systematic price moves which occur on the chart. They are related to the trend and they are important to your understanding of a trend trading system. These two types of price moves are called impulses and corrections. Trend impulse. The trend impulse is the price move which comes after the interaction with the trend line and after the price bounces in the direction of the trend. These are the types of moves that a trend trader pursues. The reason for this is that the trend impulses lead to bigger price moves for a relatively shorter period of time. Trend corrections. The corrective moves during trends in Forex come after the impulse and lead the price back to the trend. The correction moves on the chart are not as attractive for trading. Traders without sufficient trading experience should stay out of the market when the price is in a correction phase. What this means is that you don't trade against the trend. The reason for this is that corrections are relatively smaller and often last longer than the trend impulse. Why take a position for less profit potential and for more time risk in the markets? This is definitely a riskier initiative. In the image below, I am showing you the basic mechanics of a trend with its respective price impulses and corrections. As you can see, the euro-dollar price on the image records higher tops and higher bottoms, which suggests that there is a bullish trend on the chart. The red bullish line on the chart is the respective bullish trend line. The green arrows indicate the price impulse and the red arrows indicate the correction of the trend. Notice that the trend impulse leads to relatively bigger price moves in the direction of the trend. Contrary to that, the corrections are small. The third correction on the chart has approximately the same duration as the last impulse and later leads to a breakout in the trend. At the same time, the price move it creates prior to the breakout can be described as a tight consolidation. After the breakout, the euro-dollar pulls back to the trend line to test it as a new resistance and subsequently rotates to a new bearish trend move. How to identify trending Forex pairs? Before you prepare to trade a trending setup, you must first be able to recognize that a potential trend is underway. This is a basic component to any Forex trend trading system. Seasoned traders will tell you that the trend is your friend, for good reason, because the profits from a trending pair are bigger and the trades can involve less risk. So now that we realize the benefits of trading a trending move, we have to create some solid rules to pinpoint a potential trend trade setup. We will discuss a few trading techniques for spotting potential trends on the chart. Swing tops and swing bottoms. Yes, we repeat this again because price swings are the basic characteristic of every trend on a chart. If the tops and bottoms are increasing, we have a bullish trend. If the tops and bottoms are decreasing, then we have a bearish trend. In all other cases, we have a non-trending environment, a sideways market. Now we discuss the third interaction with the third line, the third impulse. Every 2 points on the chart could be connected with a straight line. However, if a third point lines on the same line, then we have a tendency. In this manner, the trend confirmation usually comes after the price tests the trend at the third touch and bounces from it. When you see the bounce, you can enter and open a position attempting to catch a new trend level. In this chart, the green arrows indicate the price impulses and the red arrows show the corrective move. These are the first 2 points used to draw a trend line. Now we will sit tight and wait for price interaction at the third touch. The third arrow on the trend is blue. You will notice a strong bearish response of the trend line. This will be considered our trend confirmation and prepare us for a short position. The fourth arrow is also blue because the trend is already confirmed. In this manner, a return and a bounce from the trend will give us another trading opportunity. The 2 short trades in this case both create a trading opportunity, though the 3 touch in generally will typically provide a better return to risk ratio. Trading volumes. Volumes are helpful for identifying emerging trends. The reason for this is that in many cases, the Forex pair will start trending after the volumes have increased. In this manner, the impulse trend moves appear during higher trading volumes. Corrections, on the other hand, appear during lower trading volumes. When volumes are high, there is a lot of action in the market. Therefore, high volumes are offered insights into emerging trend impulse waves. Let's take a look at the volume indicator on the chart. As you can see, the volume indicator on the euro-dollar chart. Notice that the trading volumes pretty much respond to impulses and corrections as shown with the arrows above. At the same time, when the volumes start counting for an overall decrease, we see that the euro-dollar price enters a ranging phase, which leads to a breakout in the bullish trend. The trend reversal comes afterwards. On caveat regarding volume in Forex is that since there is no centralized exchange in the Forex market and thus no centralized source for volume data, the volume readers are typically taken from the Forex brokers' available data, and as such will not provide a complete picture of overall volume within the traded pair. However, using the volume indicator with the understanding of this limitation in mind can assist you in your trend analysis nevertheless. How to trade with a trend? Since you are now familiar with the process of identifying trends on the chart, it is now time to discuss a way to take advantage of trading currency trends. We will now exhibit a trend trading strategy which is straightforward and relatively easy to implement, and it's completely free. We are going to use an assistant indicator to support our trend trading strategy. This will be the moving average convergence divergence indicator. But before we dive into the actual strategy, let's take a closer look at the math. Math crossover. The MAC consists of two moving average base lines, which interact with each other above and below a zero level. When the faster line breaks the slower line in bearish direction while being located above zero, we expect the price to start trending in bearish direction. When the faster line breaks the slower line in bullish direction while being located below zero, we expect the price to start trending in bullish directions. MAC histogram. The MAC indicator also has a histogram. This histogram displays the exact difference between the faster and the slower line. If the histogram is positive, then the faster line is above the slower line. Long signal. If the histogram is negative, then the faster line is below the slower line. Short signal. MAC divergence. The moving average convergent divergence is also good for spotting divergence between price and the indicator. If the price is increasing and the MAC is decreasing, then we have a bearish divergence, which indicates that the trend is likely to reverse. The same is enforced but in the opposite direction for a bullish divergence pattern. If the price is decreasing and the MAC is increasing, then we have a bullish divergence. In this manner, we expect bearish trend to switch to bullish activity. MAC trend trading strategy. One way to trade trends is by combining trend lines, MAC and the volume indicator. We can try to match signals from the MAC indicator and the potential emerging trend line and perform a volume analysis. Imagine you have an upward price movement on the chart. At the same time, the MAC signals a bullish crossover below the zero, supporting the price increase. In this case, we can look to go long until we see a contrary signal from the MAC. A stop loss order should be placed here, below the recent swing bottom. The same technique is enforced for bearish trends. If the price starts accounting for lower tops and lower bottoms, we use a bearish MAC crossover above the zero in order to short a currency pair. The image below will show you how exactly this trading strategy works. This is the euro-dollar 1-hour chart. This example starts with a bullish MAC crossover. Notice that at the time of the crossover and continuing afterwards, the euro-dollar price is ranging. However, during the horizontal move, the euro-dollar trading volumes are consistently increasing. Suddenly, the price action creates a higher top, breaking the level of its previous top. This clues us into a possible price increase, and after a short correction, there is an opportunity for a long position on the chart. The stop loss order should be located right below the bottom, which should be used for the long position. The price action continues with a new impulse on the chart. The following correction nearly hits the suggested stop loss placement. However, the price action doesn't manage to decrease significantly below the previous bottom, and the stop loss sustains the danger. The price continues with two more impulse moves and their adjoint corrections. Notice that the MAC indicator is now located in its top area, indicator that we might see the end of this bullish trend soon. However, the trade should be held until the MAC line signal a bearish crossover as stated in the trading strategy. The last correction on the chart is sharper than usual, which causes the two MAC lines to interact with each other. This acts as an existence signal for this trade, and one should close the position for profit. As an alternative to using the MAC crossover as the exit, you could have also considered waiting for the trend line break instead to close out the long position. Now, let's sum it up. Understanding price action trends in Forex helps keep trades on the right side of the market. Trends could be bearish or bullish. Bearish trends, they have lower tops and lower bottoms on the chart. Bullish trends, they have higher tops and higher bottoms on the chart. If a trend is not present on the chart, then we have a price range, a sideways price movement. Some ways to visualize a tendency on the chart is by using swing highs and swing lows analysis, or the trend line indicator. The trend line is applied by simply connecting the tops or the bottoms on the chart. When a Forex pair is trending, it accounts for two types of movements. Trend impulses, these are the moves in the direction of the trend. They are attractive for trading. And trend corrections. These are the moves which leads the price back to the trend line. They are not as attractive for trading, and it is not recommended to trade them if you are not an experienced trader. One way to confirm a trend is to identify the beginning of the third impulse related to the flat trend line. Volumes are helpful for trend confirmation. Impulses usually happen during higher volumes, while corrections appear during lower volumes. One way to trade trends is by combining trend lines, MAC, and the volume indicator. As I promised you at the beginning of this video, I am giving away this free ebook if you want to understand the myths of market trends and patterns. All you have to do is enter the link in the description box and download your free ebook. All you have to do is place your email so I can send you the ebook. Also, do you remember that I told you at the beginning that I will show you how is the best way to identify the strongest trend pairs so you can become a profitable trader and to stop losing trades? Well, I am talking about Forex trending. Forex trending is the best way to know which pair is trending. Forex trending is a software solution to avoid trading during uncertain market periods. Instead, pick the best trending pair at the current time. It uses no indicators, but the trend is determined by pure price action. The software runs on our powerful computer, so you instantly get the result online. Therefore, you can use your favorite trading platforms such as MetaTrader, NinjaTrader, TradeStation, and there is nothing you have to download or install. It is very easy to use. The truth is that most Forex systems or robots make money with the trend, but lose money in a choppy market. For example, imagine your trade is a system that makes 50% winning trades, but another 50% are losing trades. By following the trend, you will dramatically increase the odds of winning. If you increase the odds of winning by only 20%, that will make 70% winning trades and 30% losing trades. This can make the difference between losing, breaking even, and winning. In other words, by following the best trend, it can only be better. Forex trending quickly scans 34 Forex pairs on all time frames from 1 minute to 1 month. That's 306 charts. Forex trending analyzes all the charts for you every second. This way you get the best trending pair and time frame at any time you want. If you want to learn more about Forex trading, all you have to do is enter the link in the description. Also, remember to download your free ebook Understanding the Needs of Market Trends and Patterns. I hope you understand how important it is to trade with trends to make money trading Forex and to increase your winning trades. Don't forget to check out the links I am leaving in the description so you can improve your profits and you could increase your profits and stop losing money while trading Forex. Don't forget to subscribe to my YouTube channel and press the bell notification so you can be notified when I upload new videos. Also, don't forget to follow me on Instagram. See you next time. Bye bye.